In the ever-evolving world of electric vehicles, there's a name that's been making waves, and it's not Tesla. It's XPeng, a Chinese EV giant that's gearing up to unveil its Q2 results for 2023. But with a mix of challenges and opportunities on the horizon, the question on everyone's mind is, can XPeng drive its way to an earnings beat? Let's dive deep and find out. XPeng, the renowned Chinese electric vehicle maker, is on the brink of announcing its Q2 results for fiscal 2023 on August 18th. The expectations? An adjusted loss of 30 cents per share on revenues of $693.18 million. To put this into perspective, in the same quarter of the previous year, XPeng reported an adjusted loss of 43 cents per share on revenues of $1.11 billion. But here's the catch. XPeng has a history of not meeting analysts' expectations, and there's a possibility history might repeat itself. The EV sector isn't without its challenges. Rising interest rates, supply constraints, and a price war initiated by none other than Tesla are some of the hurdles. Add to this the Chinese economy's deflationary pressure, which is impacting exports, imports, and consumer spending power. But XPeng's challenges aren't just external. Internally, the company has had its share of turbulence. The recent resignation of Dr. Xinzhou Wu, the vice president of autonomous driving, led to a dip in XPEV shares. Their July vehicle delivery numbers didn't quite hit the mark either. However, XPeng is ambitious, aiming to ramp up its delivery average to 15,000 units in Q3 and a whopping 20,000 units in Q4. Now, it's not all gloomy for XPeng. Volkswagen has recently poured a hefty $700 million into XPeng, acquiring a 4.99% stake. This isn't just a financial investment. The two giants have joined hands to produce electric vehicles specifically for the Chinese market. This strategic move was lauded by Wall Street, leading to price target upgrades and a renewed perspective on XPeng's shares. So, what does this mean for the stock's value? Analysts have pegged the average price target for XPeng at $15.66, hinting at a 2.1% downside potential. The stock currently holds a moderate by consensus rating, with a mix of buy, hold, and sell ratings. But here's an impressive figure. Year-to-date, XPEV stock has surged by 53.1%. Options traders are forecasting a potential plus or minus 8.08% swing in XPEV stock post the earnings release. To give you some context, the stock dipped by 5.05% after missing the mark on analysts' estimates for Q1-2023 results. In the grand scheme of things, XPeng is pushing hard to enhance its EV deliveries, even with the macroeconomic challenges. The Chinese economy's recovery might be a slow process, but the government is mulling over measures to stimulate domestic demand and EV consumption. Analysts, while cautious, are still optimistic about XPeng's future trajectory. Now let's talk numbers. For the upcoming trading session on August 18th, there are some crucial surge signals to watch out for. On the upside, we have $16.34, $17.03, and $17.41. On the downside, it's $15.27, $14.89, and $14.20. But what do these numbers signify? These surge signals are pivotal price points that could confirm a directional move for the stock. If the stock approaches or breaches these levels, it could indicate a potential trend. For instance, if XPEV stock hits or surpasses the $16.34 mark, it could be a sign of an upward trajectory. Conversely, if it drops to or below $15.27, it might be heading for a downward slide. These signals are essential for traders to make informed decisions and predict the stock's movement. And there you have it, a deep dive into XPeng's current scenario and what the future might hold. If you found this analysis insightful, don't forget to hit that like button and subscribe for more in-depth stock analyses. And hey, what's your take on XPeng's upcoming Q2 results? Drop your thoughts in the comments below. Let's get the conversation rolling.